As we kick off a new trading week, the major U.S. stock averages are straddling the flat line. Today is Columbus Day in the U.S., and that means bond markets are closed, but equity markets do remain open. Joining me now is Jonathan Corpina of Meridian Equity Partners. Jonathan, great to have you here today.
Good afternoon.
Well, of course, this week kicks off third quarter earnings season. We will be getting the results out from the big banks. But when we take a look at the bigger picture, this week we'll be focusing on inflation figures as well as retail sales in terms of data, and of course the Fed minutes. So in terms of changes out from D.C., from the Fed as well as Capitol Hill, what do you expect to see before year end?
You know, going to be a pretty interesting week. Like you said, equity markets are open today, but bond markets are closed. So things can be very quiet today. It gives people some time to really take a step back and reflect and to think about what the market is going to do. I think we are waiting for some information from the Fed as to how they want to play out the rest of this year. Clearly, in December of last year, they explained how they were going to be data dependent on making their moves. They continue to be, and data has supported that they should be continually raising interest rates in a steady pace. If they don't do that, I think investors are going to feel somewhat misinterpret that message that came 10 months ago as to really what are they looking for and what they want to do moving forward. So I think we're not going to see a lot of activity this week, but we're certainly going to see a lot of information that will help investors plan for the end of the quarter.
And John, it's hard to believe, but the equity averages continue to reach new record highs. So in terms of a correction before we head into the new year, do you expect to see one?
Not as much as a correction, right? So the markets have moved higher and higher, up significantly over the last months, quarters, years. If you look at the activity today, yes, very flat. We've got the VIX trading above $10 at this point, which is interesting to see. I do think we will see a pullback in this market, maybe a 1 or 2% pullback by the end of this year. Nothing to panic over.
And in terms of the foreign exchange market today, we are seeing some action in terms of the sterling. Now, that is the only currency that is gaining significantly against the U.S. dollar today, and this does come on the heels of more certainty out from UK Prime Minister Theresa May. But we know globally we have political and geopolitical risks, so how are you factoring those potential minefields? Right,
so absolutely. I mean, if you look at individually today, yes, there are some other markets in the world that are closed today, so we don't see that correlation between the currencies and the markets that trade there. But we clearly have geopolitical issues that are continually hanging over our heads and hanging over this market. And we're going to see that fear or that unknown play in the local markets and in the currency markets.
And last but not least, before I let you go, in terms of sector, what are you looking at this week as well as the rest of this month?
As you said before in the lead-in, clearly retail is something that we're going to look at. We're kind of in this in-between area. We got past back to school, and we're looking forward to the holiday season. And then also the financials, the big banks that are coming out. We used to look at Alcoa as the beginning and the barometer of earnings season. Now it's some of the bigger banks. So we're looking forward to that this week.
Okay, Jonathan, thank you so much for joining me on this Columbus Day.
Thank you.